All right, ladies and gentlemen, welcome to day 2 of the Rich Off TICKS boot camp. Very excited to have you guys back here, and we got a lot of content to dive into today, a lot of foundation to set. But before we dive into that, I just wanted to take a moment to connect with you guys to talk about some things in regards to, what even is trading? What is this journey you're about to undertake? What is this industry that you're about to step into? And what is the lifestyle and, basically the day-to-day of what being a trader entails? And a lot of people have a false expectation about what the life of a trader is actually like. Here, let me full screen this camera so you guys could see me a little better. A lot of beginner traders especially have a lot of false expectations about what trading is. Trading is not a get-rich-quick scheme. Trading is not endless money infinitely, easily. That is not what trading is, guys. Trading is very simple, but like all things that are very simple, it takes time. It's very hard to master it. And I would even say that it's impossible to master. It's one of those life disciplines, much like martial arts, much like boxing and MMA. I don't know about you guys, but I come from like a boxing background, MMA, and then also a lot of traditional martial arts. And they go by the practice, they go by the life principle that you never really master the art. You never really reach the destination or quote unquote the end of your journey. It's a lifelong journey. And from the time you start till the day you die, you are continuously improving on that journey. Trading is the same. Exactly the same, actually. You're never solidified in trading, as in you're never safe. You can be the best trader in the world, and if you misbehave, if you mismanage your resources, you can just as quickly end back up at the bottom with all the 99% of traders. So it is really, you're as good as your last performance. So that's the reason why I compare it to martial arts, why I compare it to boxing. Somebody could be the world champion of the world in boxing, but the second they get knocked out, now everybody, the illusion's gone. They're like, oh, maybe he isn't so good, or maybe he doesn't know what he's doing. And a lot of traders experience the same thing. A lot of traders come and go. A lot of traders go on really good runs and then disappear because they can't stay consistent and they can't continuously improve. So that's what we're going to dive into. We're going to learn the right way. We're going to learn the way of mastery, and we're going to start with the foundation. So now that we've kind of set the stage, guys, you know what to expect. You know that this is going to be a lifelong journey of improvement. So if you're serious about this and you've already committed to this 30-day journey, then stick with it, guys. And we're going to go ahead and dive straight into some of these slideshows. All right, so diving right into it, what even is trading? Like, how do we define and put a definition to this? Well, trading is simply the buying and selling of financial instruments like stocks, bonds, commodities, currencies, cryptocurrencies. You're buying and selling these with the goal of making a profit. And trading versus day trading is actually a strategy of trading where traders buy and sell securities like all the ones we mentioned up here within the same day to profit from short-term price movements. So traders as a whole are simply the buyers and sellers of these assets. Day traders, and specifically, are the ones that are getting in and out within the same day. So it's shorter term decision making. And even deeper, if we go a level deeper within day trading, there are different styles of day traders. So you might have heard of intraday traders who trade on a particular session or sessions. Usually these people will be in the markets anywhere from like 30 to 45 minutes all the way up until like a full 4-hour candle. And that is intraday traders. And even more short form than that is scalpers. So scalpers is what we're doing. We're getting in and out within 1 minute, 2 minutes, sometimes even less, but at maximum like 30 minutes to an hour is the longest that you'll see me usually hold a position. So most of them will play out quickly when you are scalping, but this is the difference between a trader, a day trader, and then, intraday traders, scalpers. Of course, there's swing traders where you're holding for like a couple days, maybe even a week or so. And these are all different nuances of how you could trade. So very important. I'm going to say this right now, guys. No matter what strategy you're using, we're going to get very into technical strategies, guys. Understand that technicals are actually the easy part once you get all the rest of the stuff in place. But we will be covering strategy. So no matter what time frame you're on, a fair value gap is still a fair value gap. An order block is still an order block. Liquidity is still liquidity. Yes, the higher time frame you go, the more impactful, the more relevant, the more influence that level is going to have on price. However, there are still all these PD arrays forming on each of these time frames. Now, how does that apply to you? That means that no matter what style of trading fits you best, you're going to still be able to use all of these strategies that I'm teaching you. You don't have to be a scalper to use what I teach you on the 1 minute on the daily time frame. And actually, it'll have higher probability because you're on the daily time frame. You're just going to have to wait longer. So just to let you guys know, everything you're learning, even if you decide at the end of this, I don't really like scalping, I want to swing trade, or I don't really like swing trading, I want to do intraday trading or scalping, or maybe you decide you want to do long-term investing with the tools that I'm giving you. Just understand it's versatile. The tools I'm giving you work in any market, they work on any asset, and they work on any time frame. No matter which one you pick, it is going to work. Now, with that said, it is very important to pick a style of trading that matches your personality type. This was a mistake I made at the beginning, and I'm punch in here. This mistake I made at the beginning as a beginner trader. I was trying to do swing trading, and then that took too long, so I tried to do intraday trading / it was still kind of swing trading. I'd hold for the full day. So I was pretty much just a regular day trader, and I was trading support and resistance on the 30-minute time frame. So basically, in order to get a trade confirmation, I was waiting for 30-minute candles to close. Do you know how fucking long I was sitting there, bro? Do you know how much impatience and FOMO and greed I was getting when I was sitting there waiting for 30-minute candles? Versus now I wait for 1 minute and 30-second candles, and I trade off of 15-minute candle narratives. So it's a lot better for my personality type because I like quick in and outs. I like being able to flip my bias. I like being able to adapt, and I like being able to cut the trade if my decision is starting to not play out. So I don't like to hold something and then have to wait a very, very, very long time to figure out if it works. And I don't like waiting for a very, very long time for something to form in order to give it the opportunity. So when I discovered this and I started scalping versus doing intraday and swing trading, my trading changed, guys. Automatically, I was more disciplined because I wasn't waiting 3 hours for a setup confirmation, and I wasn't waiting another 2-3 hours for it to play out. I was waiting 1 to 2 minutes for the setup confirmation and a couple minutes for it to play out or not play out. So obviously, I'm not in and out in 1 minute every day now, but I'm also not sitting there waiting for hours anymore. So if you're a beginner, you're going to have to experiment with this. But those of you, if you're noticing, you get a lot of greed, you get a lot of impatience, it might just be because the time frames you're trading on. You might just be looking at too high of a time frame. You might need to bring your strategy to more of a scalper setup. And I'm going to show you guys how to do that and how to tailor your strategy to yourself as well. But I just wanted to nuance that really quick because so many traders, guys, will get into trading, learn a strategy, learn a system, and learn a style that doesn't even fit their personality type. So they just end up fighting themselves no matter how well they understand the strategy. So with that being said, guys, let's move on to the next slide here. Going to take a quick drink of water here. Please excuse my interruption. Ooh, gotta stay hydrated out here, bro. Gotta get that good spring water. None of that filtered water or any of that bullshit, man. All right, so let's get back into it. How does trading work? So what actually happens when you place a trade? Right, we're not on the stock floor anymore, waving around a ticket, making calls to the broker. We're trading on the computer. So when you press that mouse on your keyboard, how does this actually work? So what happens when you trade? When you place a trade, you profit if the market price moves in the same direction as your speculation. However, if it takes the opposite direction, you incur a loss. Pretty self-explanatory. If you take a buy or you go long, market moves down, you're going to take a loss. If it goes up, you're going to make money. Same thing with a short. If you short sell the market and it goes down, you make money. If it goes up, it'll probably end up stopping you out. So this is the process. If you place a trade on a platform, say I take a trade on like Tradeovate or something like that, it goes from the platform to the over-the-counter broker. So when you click that button on your computer, it sends the order to the broker. And the broker and you agree upon that price that you buy or sell it at. And then from there, the broker sends it to the centralized exchange. And this is where the order is actually processed. And that is the flow of things. So a lot of people hear these words, brokers, exchanges, what platform do you use? A lot of platforms also act as over-the-counter brokers. So it can be very confusing, but this is actually the flow of how the money flows, of how it works. I can't even tell you and begin to tell you how many traders that actually do trade, but they don't even know this. So don't be a dumbass, guys. Learn what industry you're in. This is actually the technical way that the market works. So now you can explain it to people when they're asking you. And an example of this is if I execute on TradingView through my AMP Futures broker, it'll place the order. TradingView will send the order to AMP Futures. AMP Futures will send it to the centralized exchange. A lot of times that's the CME group, CEX, etc. That's where you buy these futures contracts from. So that is how the orders actually get placed in the market. Now, trading psychology. We're not going to get super deep into trade psychology. We're going to have like plenty of lessons that are solely dedicated to psychology. But you've probably heard the saying before, trading is 90% psychology, possibly even more. And a lot of people, can analyze a chart, point out a fair value gap. How many people do you know on TikTok, or how many 14-year-olds on TikTok do you know that can draw a chart, point out a fair value gap, make it look super pretty and nice? A lot of people could call the direction for the day. Oh, I called that, man. Didn't I tell you that Bitcoin was going to be at that by the end of the day? Didn't I tell you that NQ was going to go up during the New York session? Well, bro, did you make any money with it? Well, no, but, I just told you it was going there, and, all of y'all should have bought. I don't know what you're doing. You fucked up by not taking my call. You should just listen to my calls. It's like, yeah, sure, bro, sure. How many people like that do we know in the trading community? A whole fucking lot of them. A lot of people could paper trade and demo trade their asses off. So a bunch of monopoly money millionaires. And very few get the result that we are all after. And what is the separating factor? It is not the ability to read a chart. It is not your chart patterns. It is not your fucking strategy. It is not how clean or well your chart colors look when you take a screenshot on Instagram. It's psychology. Psychology is the separating factor that separates people who are profitable from the traders who lose and who are not profitable. It is not technical analysis. It is not fundamental analysis. It is not being able to draw a fair value gap. It's not even being able to call the bias or call the draw on liquidity. The separating factor is psychology. So just understand that, guys. This is a mental game. This is a game of self-mastery, and this is a game of understanding what triggers you emotionally, financially, and in these markets, and being able to work through that process. So it's very much a self-mastery journey. This is the beauty of trading, and this is why I'm still in love with this sport, with this game, as far as I am into it already, because it's just the ultimate self-mastery puzzle. So now that we have that established, guys, I want to take a quick intermission here to talk about some stuff in regards to this topic of psychology. So as a trader, guys, you're going to endure a lot of losses. You're going to endure a lot of wins. You're going to basically experience every human emotion possible, because underneath the surface, no matter if you're getting FOMO or greed or you're chasing losses or whatever the surface issue is, the thing that's underlying underneath that response is your survival wiring. Because humans were all wired for survival when we were evolving. Bro, fuck. I dropped out of high school, guys. I'm sorry. That takes overriding that survival wiring. That survival wiring has been developing for thousands and thousands of years. So we must now take this time to train it in the other way. And for some people, that's going to take a long time. For some of you, it's going to be a pretty relatively quick process. So let's dive back into it, though. Just wanted to add that context about the survival wiring. Probabilities. Probabilities, guys, is the mathematical likelihood of a specific outcome happening out of all potential outcomes. So a lot of people talk about probabilities in the trading game. If you've read Mark Douglas's book, Trading in the Zones, he talks about probabilistic mindset and probabilistic thinking. And if you don't have that book, highly recommend it. I don't have an affiliate link. I'm not sponsored, but Trading in the Zone by Mark Douglas, that book at the beginning of my journey really opened up my eyes to trading. Because before, I didn't understand how people continuously made money with trading. I'm like, how do you win and lose, but you know that you're always going to win in the end? Like that, I could not wrap my head around it at the beginning. I just thought you had to get lucky. But probabilities is the way. Probabilities is the way that you actually profit. The example of this is flipping a coin 50-50, probability of heads or tails. So that's a real life example of probabilities at work. Just like with the trade, guys, there's only two ways it could go. It could go up or it could go down. Just like a coin. It could either go heads or it could go tails. So if you're long, it could either go up or down. If you're short, it could go up or down. So it's not a 50-50 probability in the market, obviously, because there's strategies, there's confluences, there's other factors that we add on top of it. But just in regards to flipping a coin or price going up and down, 50-50 probability. Now, probability provides a framework for making decisions in an environment where no outcome is guaranteed. So the market, no outcome is guaranteed. You could put all of your confluences together. You can have the best looking setup in the world, but it's still not guaranteed that that's going to play out. And the mistake traders make is thinking that there is some sort of guarantee in this game, because there's not. You could do everything right and you could still lose. And that's why we have to have systems in place, which we're going to talk about. We're going to talk about risk management. We're going to talk about rules. We're going to talk about trading plan, trading strategy, trading playbook, all of that stuff. So do not worry, guys. But just know that probability in an environment where no outcome is guaranteed, it gives you something to actually grasp on. It gives you a framework to operate in that prevents you from worrying about the day-to-day outcomes, the next loss, the next win, the next break even. You're no longer thinking in trade to trade. You're thinking in batches of trades across a long period of time. So that's probability. Trading, gambling, sports betting, crypto, all of these are games of chance where probabilities are everything. And along with that, it's also important to think in terms of a probabilistic mindset. That's what I was just referring to with trading in the zone. But a lot of traders, the mistake they make is they have an outcome-based mindset. They wake up that day, if they trade and they take a win, they're going to be excited. If they take a loss, they're going to be sad. Tomorrow, same thing. If they lose, they're sad. If they win, they're happy. They're a victim. They're at the mercy of all of these outcomes. They're at the mercy of the next trade. They're going to let it affect the way they feel, what they think of themselves. So they're very reactive to each individual win and loss. That is not where you want to be. That's how traders go tilt. That's what's going to happen when you get frustrated and you start taking a bunch of bad trades. So you do not want to have an outcome-based mindset, guys. You want to have a probabilistic mindset. So while an outcome-based mindset, they allow their mood and their life to be dictated by the markets. With a probabilistic mindset, it allows the trader to embrace the inevitable ebbs and flows of the market while trusting that consistent execution of their edge will lead to long-term profitability. So Probabilistic mindset is understanding that I'm going to take a lot of trades. Some of them are going to be wins, some of them will be losses, some of them will be break even. I have no control over what order those come in or at what frequency. The only thing I have control over is, did I stick to my strategy? Did I follow my plan? Did I manage my risk correctly? Did I only trade in the best conditions? If the answer is yes to those questions, you do not have to worry about wins, losses, all of this stuff. It's just going to be a byproduct. The money is just going to land in your bank account if you are following the right process. And you don't even have to think about money. You should not be thinking about money. The goal as a trader is to get to the point where you're so good at the trading, so good at execution and process that you don't even think about money anymore. It's just fully a byproduct. Of course, it takes some time to get there, but this is how you start. Probabilistic mindset, guys. So you do not want to have this. Do not think in an outcome-based mindset. You want to start thinking in a probabilistic mindset. A good rule of thumb for this is whenever you take a loss, smile. Start with a smile. Take yourself out to eat that day and treat it as a learning experience. You should be sitting down at the chart, journaling that experience, backtesting it, and figuring out where it went wrong and how you're going to improve. And now that negative experience, quote unquote, that you would have stored as negative is now stored as a positive experience. And that's how you begin to train the brain to see losses and wins as, equal, as one and the same. They're all pieces of a profitable edge. So that is probabilities, guys. We're going to move on to risk management. We're obviously going to dive way deeper into all of these topics. Each of these topics are going to have their own video where we dive even deeper, but I'm just giving you the high level so you can start to piece together, what type of things do you need in your arsenal? What are the things you're going to have to focus on as a trader, and how do you do that to treat this as a career and not just as another fucking 30-second YouTube video course that you're going to go through? You're going to try to take 1 or 2 trades, and then you're going to be a pussy and give up. This is not that, guys. This is not that. We're building from the ground up, and this is foundational. So, risk management, let's get into it. Risk management keeps you in the game long enough to see the probabilities play out in your favor. Understand, guys, that you're never going to be able to predict the weather, right? You're never going to be able to predict when it's sunny outside. But if you do not have an umbrella, and if you're not prepared for the rain, then you're never going to see the sun. You're going to drown before you see the sun, guys. So I'm going to give an example. Let's say you are a real estate investor and you're waiting for the real estate market to crash so you can buy a property for cheap. You saved up some money to do it, and you've been patiently waiting, but it's taking a little bit too long. The market's still propped up and prices are not dropping, and you're getting impatient. So what do? You go and you invest in a deal that you know is not exactly what you want, probably a little shittier, but you're bored, you want to use your money, so you go and invest in that. All right? So you buy another property with the money that you were waiting for that really good deal for. And then 2 weeks later, the market goes down. The deal that you were waiting for shows up on the market, and now, since you bought the shitty deal, you don't have enough money to buy the deal you really wanted. Impatience, guys. Didn't manage risk, didn't stay down long enough to wait for the probability, wait for the opportunity to tilt in his favor. So that is the example, guys. You got to stay alive. You got to stay liquid. You got to be around for the actual opportunities to actually make money from the opportunities. And that's where risk management comes into play. Most traders fail because they can't stay in the game long enough to see their edge play out. A lot of traders fail because they don't even stick around long enough to build that bank of data. So guys, if you have small capital right now, you need to focus very much on risk management, because right now where you're at, you need a large enough sample size to even get to profitability. So make sure, guys, you're prioritizing taking more positions and building more data versus trying to risk all your money and make a lot of money right off the jump. Because building a good journal, building a good log of real executions that you've taken and learning from it is much more valuable than any amount of quick money that you can make by getting lucky. So risk management, guys, understand, back to the point where strategy and price action and chart patterns don't really matter that much. You can literally flip a coin and buy when it's heads, sell when it's tails. And if you have proper risk management, you can still be profitable, guys. And I'm about to show you how. And I'm about to close this out with something crazy that you're going to just understand, guys. It's just going to tie all of this stuff together. So last thing I'll leave you with risk management is that risk management turns uncertainty into manageable exposure. So you're basically just controlling your risk, guys. You're calculating your risk. It's like if you're doing any risky endeavor where, it's not guaranteed that you make it. What do? You try to do everything you can to manage the downside of that risk, to limit the downside of that risk. And that is the point of risk management. Now, how do we actually become profitable? Everybody talks about profitability. That's the goal of every trader is to be consistently profitable. What the fuck does that actually mean? Well, in math terms, the only thing you need to be profitable is you need your win rate and your risk to reward ratio to fall within the profit zone. So this is a really good exercise for all of you. If you hit an average of a 1-to-1 risk to reward, you need at least a 50% win rate to break even, and you need at least a 60% win rate to be profitable. Same thing with 1-to-2. If you're 1-to-2, you need 40% win rate to be profitable. So notice a pattern here, guys. Notice a pattern. The lower the RR, usually the higher the win rate for the strategy. Now, this isn't always the case, guys. This definitely isn't always the case, but usually the higher RR that you're going for or that you're averaging, the lower the win rate you have. That's just kind of the nature of the game. Now, there are strategies like the one you'll be learning in this boot camp, the top and bottom ticking strategy. You're going to learn that. It's average 3-to-4 risk to reward. You guys have seen me hit 1-to-8 risk to reward before, but the win rate is still very, very high. So if you're wondering why you're not profitable, guys, it's either because you don't have a high enough win rate or you don't have high enough risk to reward. So you need to optimize for one of these two things, and that's going to bring you to profitability, guys. It's quite simple. All of this is very, very simple. It's do the right things, don't do the wrong things. But as we know from life and from pretty much every category of life in general, that's not always easy to do. Easier said than done, right? But when you have proper guidance and when you're building the foundation correctly from the jump, it is way easier, guys. Trust me, it's way, way easier. But I will not bore you guys too much. That was plenty enough for you to get started and get your brain churning. And if you're a beginner, by now you should have a full understanding of the game you're entering, of the industry, of the journey that you're about to embark on. So again, this was not a lesson where we dive into any technical concepts or strategies and stuff like that, guys. That is all coming, so do not worry, but it's very, very important that we set the stage, that we set the foundation correctly, because everything else is going to be built on top, right? You don't build a building on sand. You build a building on a concrete foundation. That way, by the time all your work is paid off, all your sweat equity, and you're admiring your finished product, it doesn't just fall right the fuck over. So that happens to a lot of traders too, guys. At the beginning of my journey, I got to a point where I was getting payouts, where I was actually seeing some financial numbers success, but under that, I still did not have a consistent system. So temporary success is probably the only thing worse than not having success at all, is getting there and then fucking losing it. So we're making sure that we build properly from the jump. This is everything that I wish I would have had and done properly from the start when I was started trading. So happy to give it to you guys. Like I said, comment below if you're still on the journey, if you made it to day 2, guys, and you came from day 1. I want you to comment day 2 complete down below, And I want you to also reply to somebody else's comment and just, give them some words of encouragement. Connect with someone, guys. Stop being shy. This is such an anti-social world that we live in, and everybody's all fucking awkward all the time. Like, guys, when I first found out about the internet, I was DMing every millionaire. I went straight to fucking hitting up Bill Gates and Warren Buffett and shit, bro. I had pictures of just like food from the cafeteria of my middle school on there. And I was like, yo, there is a 0.1% chance that Bill Gates sees my DM right now. I'm going to send it. And now it's like everybody's scared to talk to one another. People are scared to comment on IG. People are scared to follow somebody. Like, guys, out of all communities on the internet, let's not be lame. Let's not be shy. Comment down below. Start to engage with each other. Get the Discord popping too. The free Discord is in the description, guys. Link in the description for the free Discord. Make sure you're sharing your learnings in there. Ask questions in the Discord. Talk to other people about these lessons in the Discord, guys. If you want to master something, if you want to master a skill, if you want to master a language, what do? You get in that community with the people. You talk to them. You experience. You get experience speaking that language. Get experience speaking the language of trading, guys. I just gave you a lot of terminology, a lot of different concepts. But other than that, lesson 3 is coming tomorrow. Lesson 3 is going to be very, very crucial, guys. It's going to cover all the basics of, market structure, price action, swing highs, swing lows, all this different stuff, trends, consolidation, all that stuff that you guys hear online, but you never actually get a real explanation for. So these first couple videos, guys, is all pretty basic concepts, but like I said, we're building correctly. We're building foundational. So appreciate you guys being here. We'll see you in the next one. Have a blessed rest of your weekend.